Hey guys, AKIL'S here. Welcome back to another episode of the Weekend Trading Edge. If you guys are brand new to the channel, this is a show I put out, or a video I put out each and every weekend, for the most part, taking you through the market, showing you the top trading opportunities that are on my radar for the week ahead, and hopefully educating you as a trader. Speaking of education, big thank you to everyone that attended the free workshop this week. I am drained, which is why I'm doing this video a little bit early on a Friday. That way I can rest for the rest of the weekend before getting started on Monday with the new ones that just joined. If for some reason you weren't a part of it, you missed it, you're new to the channel and didn't hear about it, I'm going to put a link in the show notes below where you can watch the full recordings of the entire workshop. They should be up until the end of the month. Trust me when I say do not waste time. We went about 3 hours each day, 1 hour on the last day. So give yourself enough time to watch it, review it, take notes, and really let the information set in instead of kind of rush through it last minute. We're going to start here on the euro dollar on the daily chart. And this is going to be a simple play here, right? We spoke a lot about structure and candlestick formations in the workshop. What I want to do is I want to take a look at this. Now, I want to remind you guys, again, it is Friday. I usually record this after the markets are closed, so we still have a few hours left in the day, although I don't expect too much to happen on a Friday afternoon, especially with the Premier League starting in about an hour. But I want you to take a look at this rejection candle right here. And what I'm going to do is I'm going to use the measurement of this wick to the close as being a potential zone that I'm interested in for shorts. As I go down to the lower time frame, you can see that price action has been doing this little ebb and flow action of pushing up, retracing down, pushing up, retracing down, pushing up. We got two very nice rejection candles up here, and then retracing down once again. If we come into this zone, and this is the most important part, we can show signs of rejection, right? We don't want to be in this prematurely. We don't want to sell right at this level. We need to see a sign of rejection. If we can get that, I think it's a decent opportunity for a short-term short. So we're not looking for a price to reverse and go all the way down here, but retrace, maybe retest the previous structure low, a little in and out counter trend type of trade here. So keep an eye on euro dollar for that. Next up is going to be the dollar yen. This is the one we spoke about in the workshop where Jason made like 1,000 pip move, right? The double top up here was the short, rode it all the way down here. Mega move. If you can get one of those a year, that will make 2 years of trading for you. So hats off to that. Now the question is, after we've come down and ran into previous structure support down here and showed a sign of a hold, what is next? And once again, we're going to drop down from the daily, which is my higher time frame, to the 4-hour chart. And I want you to take a look at an interesting formation that has formed, right? Price action has come down. We put a nice little AB equals CD pattern up here. And then we had this nice little consolidation pattern. This is one of my favorite patterns, right? This is that ascending triangle where we have equal highs and we have higher lows, showing us that the bulls are knocking on the door. It looks like they can't get past the door or through the door, but each time it gets pushed down, the bears have less and less strength, and eventually the door gets knocked over. And that's what you see here with this breakout. Now, after resistance is broken, we should look at it to become or act as potential future support. And that's exactly what we're doing right now, right? We came out of this to the high side. We're now retracing back into this zone. This is a good level area, whatever you want to call it, to look for potential longs. And then the question is, if price is likely to go long, then where are we likely to go long to? Well, there's two levels that stand out to me. One is going to be right here, our next potential level of structure resistance. This should, I'm eyeballing this, right? So this should line up with a Fibonacci extension, perhaps. Fibonacci extension, swing low to swing high and back down, right? 127 right there. So I'm going to be inched out a little bit lower to 150.20s. And then we have this level up here, this zone up here as well, which could be used as a secondary target. Now, we can put in more details for this. Let's throw in some volume and see if we can get any idea of what level is more important than the other. Let's see, right here. Yep, right here about the 154 even handle. Looks like a good shot as well. That psychological number. There's a 153 even handle in there as well. So you have two psychological numbers, your levels in there that you can use too for that secondary target. But first things first, nice buying opportunity in here. Once again, if you can get your reason for entry. Again, we're not predictive in our analysis, reactive in our execution, right? You remember that from the workshop? We don't just want to buy it, right? You don't want to let that FOMO come on, take control of you where you're so afraid of missing out on the trade that you just enter right away. You want to look for that confirmation because that is going to be the main clue that allows us to have a better likelihood of our edge and our probabilities playing out in our favor. So keep an eye on this one. Next up is the Aussie dollar. Similar situation here. Ran into a previous level of structure, got a pretty big rejection right here, and now we're retracing back up. Especially if we can close the week with a higher high, higher close right here. Again, we have about a couple hours left before that happens. I do think we'll make a run at these previous highs. So the question is, how can I get involved to that level? And we're going to dip down to our 4 hour once again. You can see very similar to, not the same, but similar to dollar yen. We're looking at a break and a close above this most recent level of previous structure resistance. So I would look for some type of pullback. I don't know how far this is going to go up, but some type of pullback in the previous resistance, now looking to act as support, and then look for that continuation trade. Sorry, I was trying to move this and talk at the same time, which I'm not good at. Look for a continuation trade right up to this level. If you're looking for a more conservative level versus the very highs here, this is a nice zone right here. Again, we can bring some volume and we'll add fibs and stuff like that later. So just kind of doing the short version here. And you can see a big volume spike right in the middle here around 67.40, somewhere around that area. So bigger picture, bigger theme, I should say. Look for a short and look for a continuation up. This was something that we spoke about a few videos ago as well. Let me go down to a lower time frame perhaps, but it worked out beautifully about a month ago where we used a butterfly pattern to look for that prediction, right? So if you look at this right here, I won't walk you through the whole thing, but we'll just kind of get to the point here, Akil. We have a potential advanced pattern formation called a butterfly pattern, X to A to B. It's got to be on the hourly because that's the same candle. There we go, X to A to B, B to C, and then C to D right here, that 127 extension. That 127 extension is where we expect our butterfly pattern to complete. Again, if you're a butterfly pattern, you can trade this in its own right. But if not, again, it just tells you pay attention to this level because this is where that retracement may start at. Euro New Zealand, another one where I'm looking for a potential short-term continuation to the downside, right? Recently, price action has rallied up. We've come to a previous level of structure. Look left, structure leaves clues. Boom, we've held that previous level of structure. And we are putting in a head and shoulders pattern. It's not your prettiest head and shoulders pattern in the world, but the market isn't a beauty pageant. It is a place where we can extract profit from having an edge. And a head and shoulders pattern is a classic pattern formation. That classic pattern formation tells us essentially a complex reversal. So in this case, we should be looking for potential shorts. And just to measure out the head and shoulders real quick, this would be the left shoulder, this would be the head, this would be the right shoulder, and the neckline right here. What we're looking at here is down on the 4 hour, also a breakout from kind of this falling channel, but that's a whole different story. But essentially, I would be looking for a continuation right down to the bottom of this zone, right? Some people look at this as supply and demand. I just like to call it the elephant zone because I think it's cooler that way, and I get to use an elephant emoji. But you guys know my style, right? Look for the consolidative period before the elephant zone. I got taught that, a long time ago? I feel like I've been doing this too long. I don't know how long ago, but I was taught that, and it's been a trick that I implemented in my trading and something that allowed me to take my current way of trading, or at the time, my current way of trading, add something else to it that increases my edge just a little bit, and now it's become a cornerstone of my trading, and that's how you kind of evolve over time, right? In the workshop, we spoke about once you have a strategy, you develop a strategy with an edge. Increasing that edge comes from the smallest of things, where it's like you win a little bit more percentage-wise, you lose a little bit less percentage-wise. When you do win, you make a little bit more profit with each win. Maybe you lose a little bit less with each loss, and there's active trade management tactics, right? It's slowly increasing that edge, slowly shifting that degree 1 degree, or that direction 1 degree at a time. And for me, a big thing that allowed me to get better at trading was just getting better with pinpointing target locations, and that falls into the getting a little bit more out of each profitable trade. And this has been something that really helped that. So we're looking for a move back down to this zone. We got a nice even handle number, psychological number there as well, right? 181. So you can look for pullbacks, you can look for breakouts, whatever fits your fancy, but look for opportunities to trade it down to this zone. This should be the next stopping point. And then this may offer a counter trend trading opportunity back up as well. Or if we break, then you have that bigger head and shoulders that you can play with too. That's it for this week, guys. Subscribe if you haven't done so already. Make sure you check out the Trading Coach podcast, 3 new episodes each week. And make sure you watch the recordings of the Beat the House workshop. It was 4 days of fun. I appreciate you guys making it a blast and making it so easy for Jason and myself to kind of spread our knowledge. Sometimes it's difficult when you have a bad crowd, but you guys were fantastic. You were listening. You asked good questions. We couldn't ask for a better bunch. So hats off to you guys. All right. Until next time, plan your trade your plan. Have a great weekend. Enjoy your Premier League Opens and a lot of your other soccer league opens as well. And take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.